Hey, hello everybody. How are you doing? Good evening to you all. Right, is it evening now? Good evening, good morning, good afternoon, wherever you are connecting from, all over the world, any place. Okay, so I celebrate you all. We're here again. Just nothing much to discuss about smart money concept. Right, for those of you in phase one, done with the phase one course, done with the phase two course, and all those things. Okay. So now we're entering the phase three course. Right now we're going into smart money concept itself. All right, so we just want to look at one or two things on smart money concept and then we begin to progress from there. Okay, so welcome to smart money. This is how we trade. Okay, this is the main strategy, or this is the strategy we use when we trade. There are many other strategies out there, like the trend line strategy and virtually maybe support and resistance and stuff like that. Okay, all those pivot points, all those things, right? But we trade like smart money. All right, so that is strategy we basically use when trading in the forex market. So welcome. This is just introduction to smart money to be able to teach you guys how we can go about it, all right? And then how you can become a smart money trader, all right, to be able to make the most out of the forex market. So we're going to just make progress from here. So smart money now, all right. So what is smart money in short? SMC. So what is SMC about? Okay. So SMC is just a type of strategy employed in technical analysis. Of course, you already know what technical analysis is all about. You have three types of analysis: the fundamental analysis, right, which have to do with reading news, understanding calendars, and all those things that can affect the market, right? All those news, economic news, and stuff like national news, all those kind of stuff that can affect the market, all right? Then we have the sentimental analysis, which have to do with just understanding the bias of various traders to make certain decisions in the forex market. And then we have technical analysis, which have to deal with price charts, okay, using the previous data or previous price, how price reacted in the past to be able to determine how price is going to react in the future. Right? So SMC is just a type of strategy. Like every other type of strategy, there are many types of strategy. We have, like I said, the trend line, support and resistance, Y curve, so many things out there. Right? So many other guys use indicators, all right? The SMs, SMA, or something like that, I've forgotten, all right? The moving average, all right? And all those things. So basically, RSI, so many guys use all those different things, strategies employed to be able to trade the forex market. But SMC is just one of all those kind of strategies also. Anyways, employed in the technical analysis, employed in technical analysis in the forex market. So the aim of SMC or the aim of this concept is to be able to make it become, is going to make us become, sorry, is to make us become able to trade like the institutions and the bank. Right, all those big guys, like at the beginning of the course, we analyzed and then we saw the top 10 types of currency traders, JP Morgan, all those big guys, yes, the Bank of America, all those great guys, HBS and stuff like that. So we want to just know how these guys trade. All right, in the forex market, you never want to trade against structure or trend, and you also don't want to trade against the bank. All right, the trend is your friend until it goes against you. Some popular statement like that. Right, when the market is bullish, you don't want to be going bearish. When the market is bullish, you want to be doing what you want to be buying. When the market is bearish, you also want to be doing what you want to be selling. Okay, so when we're talking about SMC, when we're talking about smart money concept, it's just an edge to be able to help us trade like the institutions, to be able to trade like the big banks. Okay, that is the goal. That is what we're trying to achieve. That is what we're trying to understand. How does these banks trade? Since they have the enough capital to be able to move the market to whatever direction it is that they want to move the market. So how do they trade? How do they take their trades? How do they enter trades? What do they do whenever they want to take a trade? Okay, so that's what we just want to consider. All right. So why we trade this way now? So why do we trade this way? So why do we trade SMC? Why use SMC? Why not any other things? Okay, so SMC, it gives us an edge as to what the banks wants to do so as to move in line with them. Right? When you understand smart money concept, you can easily understand what the big institutions, what these banks, what these guys are about to do. So you can move what's in line with them. You don't want to be trading against them to avoid being clapped in the market, to avoid being manipulated and stuff like that. Okay. So we want to be able to identify what is the bank, because these guys, the reason it's like this because these banks manage large funds which give them the power to be able to manipulate or move the market, all right? They have enough capital to buy large contract size of things, assets and all those things. So it can help move the market very well. So and then the rest of the time you can see how these guys, when we get into the concept and then the checklist, you will be able to identify how to go with the bank, all right? So, but it gives us edge as to what the bank wants to do, so we can move in line with them. All right. Then the banks, like I said, manage large funds, which give them the power to become able to manipulate the forex market. So SMC helps us to be able to trade in line with them, so as not to become a victim to them. All right. Trading in itself is a game of liquidity. Right, it's a game of liquidity, and of course, you know by now that liquidity is just simply where people's money are. All right, so it's just a game of liquidity, because your loss is somebody else's gain, somebody else's gain is your own loss. All right, so your gain is also somebody else's loss. So that is just it about the forex market, since it has to do with buying and selling, exchange of one currency or the other pair, and stuff like that. So that is just basically what it is. All right. So note also that I would like you to take note of this, that there is no strategy that is the holy grail as to deliver 100% result. All right. So there are many strategies out there, like I mentioned earlier. Nevertheless, SMC is a proven strategy which has been used by so many great traders that ever exist and are still existing anyways. So SMC has been proven. And then, like I said, one of the things you want to do for yourself as a trader is not jumping about looking for which particular, looking for which, maybe jumping from one strategy to another one strategy. It's just best to discover the strategy that works. How many persons have you seen trade this strategy that are making funds out of it, that are making out money out of it, and do what? Stick to it, give it 1 year, give it 2 years, give it 3 years, master the strategy and become able to trade. That's just what you want to do in forex market, all right? So you want to be able to identify what exactly your trading edge is, and then SMC is one of those very good proven strategy which have been existing for several years, and we've seen tons and tons of traders that are really doing well with SMC. All right, so you want to be able to understand how they work and then trade in line with them. Nothing much, nothing less. That's just basically what SMC is all about. All right, so it's a proven strategy, right? Which has been used by so many great traders that ever exist, that ever existed or are even still existing, because people are still using it. I'm still using it. Great traders like John Phillips, Matthew, Honcho, so many guys that you can never come to think of. All right, these guys use these traders and they're making their money out of it. All right, it's a proven strategy, no doubt. Many people use it, tons and tons of persons use it. All right. So then what is now the XMC checklist? How do we trade the SMC? Right, so below are the checklists we consider when trading SMC. So it is very important when analyzing your charts, you follow this order. So it is very important to follow the order when analyzing your charts in the forex market. Okay. So how do we trade SMC? What do we look at to say that we're trading smart money concept? Number one is that you want to be able to run your top-down analysis, your structure, your trend. You want to be able to tell what structure is doing. You want to be able to tell what the trend is. Is this bullish trend? Is this a bearish trend? Or a top-down analysis? What is the higher time frame saying with regards to maybe using higher time frame for you use higher time frame, you get to determine structure trends, and then you use the lower time frame for what entries also. All right. So how do we do our top-down analysis from the monthly to the weekly time frame, even more than the monthly, 12 months time frame or so, something like that, right? How do you do your top-down analysis? How do you identify structure? So the first thing you want to do is to be able to do your top-down analysis, identify what is the structure. Is the structure bullish or is it bearish? All right. And after that, you now want to be able to identify what we call your trading range. You now want to know, okay, which range is it that we're going to be trading in the forex market now? What exactly is your trading range? Then you want to identify the liquidity. Then the fourth checklist you want to identify is the banks, the institutional candle, where the banks are hiding, which we are going to now look at. All right, since we want to trade like the institutions, we want to see those footprint candles or those things, where are the banks exactly hiding, so you can join them to take the trades they want to take. All right, so we want to understand the banks, institutional candles, mitigation, imbalance size, imbalance price action, that is IPA, imbalance price action. All right, and then finally the fees. So these are just the 5 checklists we use whenever we want to trade the SMC. Okay, so that is just SMC checklist. So the first checklist, which has to do with top-down analysis, structure, and trend. So this has to do with identifying the trend of the market, considering what the market, what the higher time frame, is saying, because the higher time frame controls what the lower time frame. The structure of the higher time frame is way stronger than what the lower time frame is doing. All right. So a good knowledge or understanding of what the structure is saying will go a long way to help determine if we're looking for buying or selling what opportunities in the forex market. All right. A good knowledge and understanding of what the structure is saying will go a long way to help determine if we are looking for a buying opportunity or whether we're looking for what a selling opportunity. All right. Whereas for trading range, we want to understand that in a trading range, when looking for trading opportunities, we also want to consider the trading range, which is made up of the most recent highs and low points formed in what a particular structure. All right. So, nevertheless, before we go over to trading range, now explain all about. Okay, let me just run through the explanations and then we'll go into the charts and see examples of understanding how we can do our top-down analysis, structure, identifying top-down analysis, structure, trend. Let me just run through this checklist, then we'll now go to the charts to seek one or two examples from that, right? So the next one is the trading range. So you want to be able to consider the trading range, which is made up of the most recent high and low points formed in a structure. All right, you want to be able to understand that. So it is an example of a bullish trading range and a bearish trading range. Okay, so you can see price in this case was bullish, it was buying before, and then what now happened? Price first of all created a low, and then went up to create what a high, and then came back, created a higher low, higher high, higher low, and higher high. So whenever you're looking for a trading range, first thing you want to be able to identify is what, where is that low point of that structure? All right, where is the low structural point and the high structural point? That low point and then that high point is what we term as our trading range, because it is between this low and this high that we want to see price retrace or come back to. So we can now begin to look for what more buying opportunities. So whenever you're now looking out for a trading range, what do you look out for? The most recent lows and highs. For example, now this low here and then this high here has already been played. So in a bullish market like this, what do you want to look out for? You want to look out for that most recent low and high, which was in this case this low, sorry, which was in this case this low, all right, and then this high. Okay, so after we got this low and this high, where can we be expecting market to retrace into? Anywhere in between this low range and then the high range. Now take price higher. That is how we determine our trading range. Okay. Sorry for that. Meanwhile, I already explained it in the previous video in phase 2. Okay, so you can always make reference to that. Same thing applicable to here. Your high range, your low range, your high range, your low range. So you just mark out that most recent high, that most recent low. That is what you consider what as your trading range when considering to take a trade in the forex market. That's just basically what it is all about. All right. So then liquidity is simply where people's money are. Those of you that are done with phase 2, I'm sure you must have seen the video on liquidity. All right. So you already know how we can get that. And then your inability to identify liquidity will eventually make you liquidity to the forex market. So if you don't identify where people's money are, the banks will definitely get attracted to take those money. And if you cannot identify it, you will eventually end up putting your money where the banks will definitely come and take that money from. So your inability to identify liquidity will eventually make you become liquidity to the forex market. Okay. So for this, the fourth matter, which has to do with the banks, institutional candle, mitigation, and IPA, I'm going to have to create a separate video on the banks, where the banks are hiding, what it's all about, okay, in institutional candles, mitigation candles, and then IPA. All right, I'm going to do a separate video on all of all this. So it's just going to be a long video on its own, explaining how the banks works, how they trade, explaining institutional candles, explaining mitigation, and then explaining IPA, so as not to make this particular slide too long. That's why I'm giving it a separate video on that. All right. And then finally, feed. We discuss about feed. All right. This helps us to identify discount and premium zones in the market so as to help us make a better trading decision as to whether we are buying from a discount zone, whether we're going to be selling from a premium zone. All right, so that is what feeds helps us to do. All right, and remember when drawing your feeds, like mentioned in the previous video, you draw it from the low to the high, so as to be able to connect it and then do what? Take your trades from there, from the discount zone for a buyer and then from the premium zone, right, for yourself. So that's just basically what it's all about, okay? I think that's the end of the slideshow. All right, so let's go into the chart and see one or two examples for ourselves. All right. All right, let me use AUD USD now charts for example. So when we talk about smart money concept, all right, we said the first checklist as we had, sorry, we said the first checklist as we had was what the top-down analysis. You want to be able to do your top-down analysis. You want to be able to say where exactly is the market going to, what exactly is the market doing. So top-down analysis, just as the name is, right? You want to start from the higher time frame and progress slow to the lower time frame, right? You want to start from the higher time frame and go down to the lower time frame in identifying structure and trend, all right? Because when you look at structure now, maybe if I should draw this, okay, so this is one thing I want you to understand. For example, in a higher time frame, when the market is bullish in this way, all right, so when the market is bullish, let's assume this to be a daily time frame chart now, all right? On a lower time frame, you come to realize that the market is going to be doing what? Creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows on a lower time frame, okay? And then this is what it's going to do. And then I want you to understand also that the market is fractal, all right? Let's borrow a definition from Google as to what fractal is all about, okay? So when we say the market is fractal, it's fractal. Sorry, not fractal. Don't kind of put tongue. All right. So when we say the market is fractal, so it's a term using geometric shape containing detailed structure at arbitrarily what small scale. All right. Usually having a fractal dimension strictly exceeding or all those big grammars are speaking the right now for our business. So, but this is what I'm even interested in. That fractal is a term used to describe a geometric shape containing detailed structure at arbitrarily what smaller scale. So, in other words, whatever we see happen in a bigger scale is the same thing we want to see what happened in a smaller scale. So whenever we see the market is bullish in the daily charts, forming higher highs, higher lows, or in the larger charts or larger scale, is forming higher highs, higher lows. Just as it is forming these higher highs and higher lows. Similar also, it's also forming higher highs, higher lows, higher highs, higher lows in a smaller chart. All right. So if this is a bullish phase, so if you go, let's say this was a daily chart, okay? So if you go to a lower time frame chart, I mean, what you're going to see is that even from this low, maybe let's say on the 1 minute, the 1 minute is just going to be creating what higher highs, higher lows, higher highs, higher lows in just this one daily bullish led by, all right? And then after that, you can see when it's coming down for retracement, you might see something like a break of structure, all right? Only for price to start coming down low and then stop somewhere here, break structure again, and continue going up just in that order, all right? So that market is just fractal that way. So whenever you want to now consider structure, you don't want to be working based on what the lower time frame is saying, because the lower time frame can be what can be deceitful, because it can break structure very well. Because whatever the lower time frame is doing, it's just reacting off from what the higher time frame is doing, nothing much, nothing less. So whenever we are considering structure, right, you want to know what is the higher time frame saying. It is the understanding of what the higher time frame is saying that is going to save you or now help you know what exactly you're looking out for from what this lower time frame. That is just basically what it's all about. All right. So coming back to that, let me come down to the monthly. For example, now you want to do a top analysis. You want to know what is the structure of the market, and after structure, you have what ranges in the forex market. Okay. So you want to know what is the structure. So generally, before, what have we been doing? Market has been what at some point we bought, we sold, all right, and then bought again, sold, bought. So what can you see market doing here now? Creating what? After creating, I'm sure, dragging this price from the back. The price created something like a low here, created this high, then created a higher low here, created went high to create this higher high, came down to create a higher low here, went as high as this to create a higher high, and then did what? Finally did what? Broke structure to the downside. So basically now what are we doing in the higher time frame? We are bearish now on Euro USD. All right, if you cannot see it, where you convert it to line chart. So we have these higher highs, higher lows, right? Then we have these higher highs, then we have this higher low, and then we have this higher highs. And price did what? Closed below the previous low here, which is now an evidence that look, that this now is now what? A break of structure. So having seen this now, the monthly time frame, the current structure is now what? Is now bearish. So even if you are buying, what are you going to be buying for? You can just be looking for that buying leg to continue taking price what's lower, because you know now a POS has occurred. So what you're looking for is that let this thing now come up to give you what we now have as a lower high, to progress down to give you what a lower low. So based on this now, if you now want to understand at what phase are you in the market. All right, this is what top-down analysis, part of the questions that top-down analysis should be able to help you answer. At what phase? In a bullish market, we have two different phases. Number one is the expansion phase, all right, when the market expands to create new highs. And then number two is what's the retracement phase, when the market retraces to create what? New higher lows and stuff like that. Whereas in a bearish market, we have the selling leg to be the expansion phase, and then this retracement here, okay, to be the retracement phase. So you want to know in top-down analysis, what exactly is the forex market doing? All right, so what are we doing in the market currently? All right, at what phase are we? So having seen this structure now, price give us a high here, give us a low, give us a higher high, give us higher low, give us higher high, and then broke structure. So having broke structure now, we can assume this to now be that high, and then here is now going to be a low. All right, so maybe price is on its way doing what now? Going to give us that what? Higher low somewhere here. So now begin to dump. Maybe that is where this buy is doing what? It's leading us to. So you want to be able to identify, okay, now based off on this, in a structure, we were bullish before, but now we are bearish. So at what phase? I know in bearish market, the down move is the expansion phase, the up move is the what? Retracement phase. So based off on this now, what is the current phase that we are in now in the current market price? So you can realize that now we are in the retracement phase, because this price is just trying to retrace so it can expand to the downside. Right? So having identified what the structure is saying on a larger time frame, all right, whether it is bullish or whether it is bearish, you can now continue scaling down until you now begin to identify, okay, sorry, you can now begin to identify that, okay, fine, I want to buy from here, or fine, I want to sell from here. So based on that, you can see that we are in a what? In an retracement phase to take price way higher before it starts coming down. So based on that, you can even see this based on structure turning to line charts. Price just giving up these lower highs, lower lows, lower highs, and then it broke structure here. And then we start becoming bullish. All right, so continue taking price to that very high, which we want to see price go to, all right, before we finalize. So this is how we just do a top-down analysis until you can now decide where exactly do you want to go. So you can see that some of all these things can be potential areas of what internal liquidity, right? The trend line liquidity and stuff like that. So it could be possible that what price wants to do is to come down, sweep the liquidity, all right, before going up. So I guess there's one thing I'm going to do now. I'm going to just create a separate video, all right, and then begin to explain top-down analysis. And after explaining top-down analysis, I'm going to explain top-down analysis, explain ranges. So I'm just going to do it in a different video. I think that will make it easier and not make the video too long and back. All right. So what I'm going to do now, I'm going to end this video. Then I will create a separate video specifically for top-down analysis. Create a separate video for ranges. Create a separate video for liquidity, identifying it in the market. Create a separate video for the banks, institutional candle, like I said earlier, and then finally create a separate video for feeds. Then at the end of the videos, I'm not going to bring all these that we've learned together, so we can now use them to be able to analyze charts and then know how we can apply them to take trades. Okay, so just watch out for the next video on top-down analysis. Right, I'm going to take out my time there to explain everything you need to know about top-down analysis and how to work it through. Same thing applicable to ranges, same thing applicable to liquidity, same thing applicable to the banks, institutional candles, IPA, mitigation, and all of that. And then finally the feeds. Then after that, to put everything together, and you'll see how we can use this to play in the forex market. Okay. So thank you very much.